This is Craig Haugard with your Financial Issues Ag Update. The coronavirus was front and center in the corn market yesterday, which was a little odd because U.S. corn values are fundamentally the least affected by the coronavirus. The U.S. doesn't ship a large amount of corn to China, and currently 99% of all the coronavirus infections are in that nation. The U.S. export inspections continue to disappoint, with last week's inspections coming in at 22.1 million bushels. Looking at South America, we see weather forecasts that continue to point towards a good crop, and that's also weighing on prices. As I record this, the overnight spot corn futures are trading a penny higher. Soybean prices chopped around slightly firmer yesterday, despite many of the other grains taking it on the chin most of the day. The technical indicators do look oversold in the soybean market. I do think that's somewhat supportive. We had the Chinese markets reopening yesterday, and soybeans in that market were down heavily. Weekly export inspections came in above the top end of trade estimations at 49.8 million bushels. Basis-wise, as you look around the country, the soybean crush plants in this nation continue to fight wide spreads and remain on the hunt for soybeans. So I would look for local basis levels all across the fruited plains to remain strong in the cash soybean market. At the end of the day, the soybean story remains the same: big South American production versus China buying and when, plus the coronavirus and African swine fever. If we knew how all of those were going to be resolved, we'd know what the soybean prices were going to do moving forward. Seems pretty simple. In the overnight trade, spot soybean futures are trading up a penny. We had a quiet, two-sided session in wheat yesterday, with Chicago and Kansas City closing higher, while Minneapolis was marginally lower. Here in the U.S., our hard red winter wheat FOB values continue to slide lower in relation to the Russian FOB equivalent. Now, Russia's ruble hit a two-month low against the U.S. dollar yesterday, and that continues to put pressure on our competitiveness in the export market. The net result of all this is that U.S. hard red winter wheat into Egypt is still $5 per metric ton higher than the Russian equivalent wheat working in there. Weekly export inspections indicated this as they continue to lag at 15.2 million bushels. In the overnight trade, Chicago is down a penny, Kansas City is 2 cents lower, and Minneapolis is trading unchanged. Cotton futures continued their downward trend, with the March futures closing 66 points lower as they settle at 66.84. In the overnight trade, however, we're reversing that and actually trading 65 points higher as I record this. Livestock futures had a pretty solid day yesterday. Live cattle futures were stronger, with the April contract finishing the day up $1 and a nickel. March feeder cattle were 57.5 cents higher, and lean hog futures turned in a positive performance, with April futures closing up $1.12.5. Class 3 milk futures, on the other hand, had a tough outing, with the March futures closing 37 points lower as they settled at $17.38. In the overnight trade, we have the spot futures down an additional 6 points. Cash livestock markets were split, with cattle lower and hogs higher. At the close, we had choice beef boxes $1.44 lower to close at $211.56, while selects were down $3.24 as they settled at $207.42. Pork carcass values, on the other hand, were 27 cents higher, and they closed out the session at $69.84 per hundredweight. This has been Craig Haugard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.